The wealthiest investor you know checked their portfolio less than you did today. How much has that cost you? Right now, APP is down 17%, CELH down almost 18%, Western Digital dropped 11%. And somewhere, an investor is refreshing their brokerage app for the 14th time this morning, watching their net worth fluctuate with every reload. They think they're being vigilant, responsible, engaged with their investments. Marcus Aurelius would call it something else entirely: self-inflicted suffering. In Meditations, he wrote, "The soul becomes dyed with the color of its thoughts." Every time you check that portfolio during market hours, you're not gathering information. You're dyeing your decision-making with fear. You're training your nervous system to associate wealth building with anxiety. And here's what most investors never calculate. The cost isn't just the stress. It's the trades you make to relieve that stress. Think about what you did the last time you saw real red in your portfolio. Not today's mild S&P dip of 0.23%. I'm talking about when something you owned dropped double digits in a single session, like APP shareholders are experiencing right now. Did you research more deeply? Did you recalculate your thesis? Or did you feel that tightness in your chest, that urge to do something, anything, to make the feeling stop? That urge has a name in behavioral economics: loss aversion. We feel the pain of losing money roughly twice as intensely as we feel the pleasure of gaining it, which means a 17% drop doesn't feel like negative 17. It feels like negative 34. Your brain is lying to you about the magnitude of the threat, and that lie costs money. Because here's what happens next. You tell yourself you're not going to panic sell. You're smarter than that. But you are going to hedge. Just a little. Maybe trim the position. Take some risk off the table. Lock in what gains are left. And you execute that trade with your hands still shaking from adrenaline, telling yourself it's discipline, when it's actually just pain management. Marcus Aurelius knew something about pain that Wall Street still hasn't learned. The pain isn't in the market. It's in the attention you're paying to the market. If you are distressed by anything external, he wrote, the pain is not due to the thing itself, but to your estimate of it. And this you have the power to revoke at any moment. At any moment, not after you get better at predicting tops and bottoms. Not after you develop thicker skin. Right now, this moment, you can revoke the power that red number has over you. Let me show you what that looks like in practice. March 2020, Alex Chen had been investing for 3 years. Not long enough to have experienced real terror. He had positions in travel, hospitality, retail. The market wasn't just dropping. It was disintegrating. March 9th, the circuit breakers triggered. Markets halted. Down 7% before lunch. Alex's portfolio was a sea of red, and every stock he owned was getting destroyed. He called Marcus Sterling in a state I can only describe as controlled panic. Voice steady, but you could hear his frantically scrolling in the background. That unconscious tick of refreshing the app, watching the numbers fall in real time. I'm not selling, Alex said. I know better than that. But I need to know what you're doing. Are you hedging? Moving to cash? What's the play here? Marcus asked him one question. How many times have you checked your portfolio today? Alex went quiet. I don't know. Maybe 20 times? And how many of those times did the information change your understanding of the businesses you own? Longer silence. None. But I need to know what's happening. No, Marcus said. You need to stop the pain of not knowing what's happening. Those are different things, and that need is about to cost you a decade of returns. Here's what Marcus understood that Alex didn't. APP dropping 17% today, PEL down 18%. Those aren't investing events. They're psychological events disguised as investing events. The actual investing event happened weeks or months ago when you decided whether these businesses were worth owning. Today is just the market's emotional weather. And checking that weather doesn't prepare you for it. It just gets you wet. Marcus told Alex to do something radical. Close the app. not metaphorically, literally delete it from his phone for 72 hours. Your thesis was based on business fundamentals that don't change in 3 days. If you don't trust that thesis enough to ignore 3 days of price action, you never actually had a thesis. You had a hunch and a stock. Alex didn't delete the app, but he did stop checking it. And here's what happened in that silence. Nothing. His stocks continued doing whatever they were going to do, whether he watched or not. Some dropped further. Some recovered. The market's March 2020 bottom came and went while Alex was learning. The most expensive lesson in investing. Your attention doesn't protect your capital. It just volunteers your capital for emotional hostage-taking. By the time he looked again 72 hours later, something had shifted. The numbers were still volatile, but they'd stopped feeling like verdicts on his competence. They were just information. Impersonal. Temporary. The color of his thoughts had changed. Fast forward to today, VIX at 15.38. That's calm by any measure. But APP is down 17%, and somewhere thousands of APP shareholders are doing exactly what Alex did in 2020. They're checking, rechecking, calculating how much they've lost, Googling for news that explains the drop, as if explanation makes loss hurt less. And with every refresh, they're moving closer to the trade they'll regret in 6 months. The Stoic investor does something different in this exact moment. They ask Marcus Aurelius's question, is this something that's really in my control, or is it beyond my control? The stock price? Beyond control. The decision to own the business at this price? Completely in control. You have power over your mind, not outside events. Realize this, and you will find strength. That 17% drop in APP, it's not a command to act. It's an invitation to practice the only discipline that actually builds wealth. The discipline of non-reaction. The market is testing whether you own the stock because you understand the business, or because you liked watching the number go up. Most investors fail that test. They prove they were never investors at all, just spectators with money at risk. Here's your one action. Next time you feel the urge to check your portfolio outside your predetermined review schedule, do this instead. Open your Notes app. Write one sentence about why you own your largest position based on information that would still be true if the stock market closed for a year. Business model, competitive advantage, management quality, anything except the current price. If you can write that sentence clearly, you don't need to check the price. If you can't write that sentence, checking the price won't help you. It will just give you an excuse to panic with more precision. The Stoics had a word for what separates wealthy investors from the rest. Next video reveals it.